Hello everybody, welcome to the TraderMerlin Show for your Friday edition. Happy Friday everybody, and unfortunately I just didn't even think about it. I don't have a glass of whiskey right here. I should have a glass of whiskey, but I was too busy working today. So I will cheers to you in spirit, and I will have some spirits a little bit later on. I hope you all had a great trading session out there. Yeah, it was, as Ron says, way off. Yeah, it was a surprising finish. I actually thought we'd have some bullish early, and then kind of tail off near the end as people just locked in some profits going into the weekend. But boy, that did not happen. We actually closed right near the highs. Some really good action. As Big Eb did, I also bought some puts today on the SPY and the Russell 2000, and I sold a dump load of calls on my open position. So I spent a lot of time today just mapping out trades. The premium was awesome. It's easy to sell calls at current price or slightly a bit higher when you have such a bullish day. So let's start there and work our way through. I'm going to start things off. Well, you saw the graphic for today. I just kind of feel like this is the overall tone of the market. It seems like there's just so much bearishness, and this week was a nice little smiley face, a little happy reprieve for everybody. So I'll start there. Here is what we had happen for the week of the 27th. I don't know if it's going to be in order. I'll start at the bottom. Bitcoin still looking weak, and I was kind of surprised. Today actually is down over 2%. For the week, though, only down 1.61%, which is a welcome change given its 10, 12, 15% slides per week over the past couple months. So that's your worst performer. The good news is from there we start to get into some positive stuff across the board. You had gold was only down 0.8%, or sorry, was only up 0.8% for the week. But still, hey, at least it wasn't negative. But we start to get in some much better numbers here. Oh, the index. I got them all out of order. I'll just do them all at once. Oil, 4.43% for the week. The Dow was up 6.49%. S&P 6.58%. And the Russell 6.68. And topping it all off, I guess a well-due retaliatory bounce. We'll call it a bear market bounce. We'll talk about that here a little bit today. But yeah, nice big bounce in the NASDAQ to the tune of about 7.36%. Thank you, Tesla, and some of the other big FANG stocks to rip that one to the upside. So I will run through, at least to show you, I'm sure all of you have looked at the markets today and been trading these markets, so let's just run through real quick and see what the end of it all looked like, because to me, the end was the real story. Notice the candle here for today's trading session. There is almost no wick whatsoever, which is an extremely bullish sign. You kind of wish that the market was open tomorrow so that you could, capitalize on that momentum, because normally when you have a candle finish strong like this, that momentum carries over for a couple of days. But here's the weekly for the NASDAQ. Let's just bring that down to the daily so you can see what I'm talking about. Same thing. Again, that two huge green candles in a row, both closing right near the highs of that candle and opening near the lows. So very bullish signs. The good news for anybody who's bullish is we did break above this little, I guess I'll call it a pause point, which was going back to the 17th and 18th of May, right around 12,594 on the NASDAQ. We ripped through that one pretty handily today. And if you look at this on a 5-minute, you kind of ask yourself, well, where were the sellers? All right, there were none. There were almost no point today did it look out to be weakness going on with the NASDAQ. It was strong pretty much all day. And what I really like is we closed near the highs and still drifting up in that slight little bit of after-hour session. So all in all, very good for the NASDAQ, which was your top dog. But here's the Russell 2000, which actually looks even stronger, right? NASDAQ had several little pullbacks during the day, but Russell was just strong like Bull Tatanka. And on the daily time frame, it also broke above that 1824 mark, which we tiptoed into it yesterday. Now, for me, it looks like Russell's going to be heading up to this next area where it was the origin of the last huge move down. I'm looking at right around 1960, 1950 on the Russell futures will be the next spot where I think you'll see this have a little bit of hesitation. What was the question there? How far out are you going with your puts? September. So I got the Septembers. I had to go 1 month, a little further. I think Big Eb, you said August. Yeah, I was definitely going to do 90 days, but I decided to go 120 just to be careful. I was actually looking at the December puts, and I'm like, you know what? It's, for the S&P at the time, it was like $14 for the put in December, and I'm like, I can get them for right around 9 for the September, so I'll just take those. Here's your S&P 500, which of course has the same picture. Good news for everybody that's bullish is we broke above that 4,100 mark, closed it, looks strong. And again, I think next week you'll be challenging this 4,300 mark, which is, again, the origin of that previous big move down. Same thing for the Dow. Dow looking a little bit better, actually. I think you got a little bit more leg room to get to these highs, which is right around 34,000, finishing the day at 33,225, up 1.92%. Hallelujah. Looking good on that one. Crude oil. It's still in this ascending triangle. You know, we talked about it yesterday where it hit this high right around 115 and then came down. Today we closed right at it. It's 115.05 is where crude oil closed today. It still feels bullish to me. I still feel like you're making higher lows. Unfortunately, it's not making new highs. But again, you get above this area of kind of consolidation or supply, and then I think you got a smooth trek up to 130, which I certainly hope not, because, man, I filled up my truck yesterday, and it's so bizarre spending $6+ per gallon for gas. Drives me crazy. Here's your gold chart. Just, you know, even though it was up 0.8% for the week, just really didn't look that great. You know, it still looks to me like it's in a downtrend from those March highs, lower lows, lower highs. So I'd be looking at some of these upper lines we have here as potential selling points for gold going forward. And, you know, I'm bullish on gold long term. Just the chart right now in the shorter term says it's going down even further. So we'll have to ride this one out. I am in gold coins is where I'm at. So I'm not too concerned about the price of gold. I will just be keeping those coins for many, many years. But you always like to see your investments move up in value, and these ones are not. And lastly, probably the biggest knock to my portfolio, Bitcoin, as I mentioned, down 2%. You know, my comments yesterday, I still kind of stand by those, which is it feels like it's just been traversing sideways. You know, if we get back down to these lows of 25,000, then I have a cause to be concerned. That said, I've had dozens and dozens of people ask me, hey, Merlin, you know, what do you think's going to happen with Bitcoin? And I got to say, I really think we're going to keep on going down. I think you see more downside movement here in Bitcoin and the whole crypto space. At some point, we will find a bottom, but I just feel like there's just too much pressure pushing this thing down, trying to shake everybody out. And if you look how much we ran up in the last 2 years, like year and a half even, going back down to something like 10,000 is not a far cry from reality. It could actually definitely happen. And it could potentially happen. All right, so Margaret says, look at you, GA. Ooga, ooga, ooga. United States Gasoline Fund. And what did you say you want to entry for a long point? Well, and looking at this one, obviously it's been on a monster run. Holy cow. From these lows you had back here at $8 in 2020, and now we're at 72. Nothing like a 10x rate of return on your investment in 2 years. But, you know, as far as where to buy in, I certainly would not be interested in it now, right? I think what you could do with this, Margaret, is look at the demand zones. And because of the illiquidity, just by the way this thing trades, it doesn't look that liquid. Yeah, it doesn't. Today's volume was very high volume for it. It was only 173,000 shares traded. For me, I have a cutoff of 1 million where I won't trade anything that has less than 1 million shares. So this one's fairly illiquid, so the demand zones I don't think are going to be as valid. You know, it begs the question of where do you look to buy back in on this one? There is an area right in here that I'll get my magnet off. An area right here that I'm okay with from a buy perspective, but it's already been hit. You know, you look at, holy cow, get out of there. That's not what I wanted to do. Oh, great. Hit the wrong button and look what happens. Let's get rid of that. There we go. You know, we've already came back into this area. So the level I'm looking at for anybody who might be listening to the podcast right now is between 6150 and 6275. But we already came back down into that area one time. Are there any fresh areas? Well, not really. I don't see anything here that jumps out at me as being a great zone. None of these actually look like great zones. Even going as far back to this $54 level, you know, it's got this unfilled gap, but that is actually a retest of this other area of demand. So kind of a choppy, odd chart to trade and look for demand zones on this one. You know, you could look for moving averages and kind of anticipate those lining up with your price chart. So you added something like the moving average here for the 50-period moving average. And you can see right now that's giving you roughly a $62 price point, which is right about where that demand zone I have drawn is. So if we start to see this thing pull back, you know, I guess you have to figure out what demand zone or spot you're looking at. I personally don't see anything that's clear cut, Margaret, not to be evasive or try to, you know, beat around the bush here. I just don't see a level here that calls to me and says, hey, this is the spot to buy. If you're aggressive and you say, I just really want to buy in, then I would say probably the origin of the move that started this week, which is between 66.75 and 68.50. There you go. Yeah, it's a tricky one. I like things that are very liquid because I feel like the demand zones pop more just from a visual perspective. These are fairly choppy and lots of gaps. It's illiquid, definitely an illiquid security. Let's see. I'm afraid this thing could drop so fast as it rallies so fast. Yeah, you know, there's a couple questions coming in which I want to make sure we get to today. I've got a few things I want to get to on today's show. So let me start there, and then I will go back through and look at your questions here. Owen says, if we are long-time holders, should we stay in or exit and re-enter? I can't make that statement for you, Owen. I will tell you what I'm doing. I'm holding mine, and you know it's been tough because obviously you look at my portfolio, just my exclusively crypto portfolio is down over 60%. That's pretty brutal. But I'm really not that concerned about it. I'm in it for the long haul, and obviously I was pretty happy to see the huge move up that happened. I've been in crypto. It sounds so weird to say, but I've been in crypto long enough. I've experienced a lot of huge bull moves that bring everybody in, and then a bear market that crushes everybody out, and then it starts up all over again. So I call it that 4-year cycle. We talked about that in the Crypto Investor Live program, and I mapped that one out for everybody. Looks to me like, according to the model I've looked at, about 4 to 6 months more downside, then sideways for about a year or a year and a half, and then we'll get the next leg up. So you got to be patient with crypto, that's for damn sure. Let's look at the stuff that happened today. I know we've got Michael here, who's a cannabis guy, and we'll get to a cannabis question here in just a second. But CGC, Canopy Growth, came out with their earnings appalling. They were expected to lose 24 cents, and then they lost 42. So they missed by 75% on their earnings. Big Lots, maybe change their name to Big Knots because they missed huge as well. Both of those down significantly. Let's bring up CGC because obviously we've been talking about cannabis stocks for a while on this program, and it hasn't seemed to look good. Today you're down another 12% on Canopy Growth, which is in line with expectations, right? You pretty much just follow that trend down until this thing starts to make some higher highs. Stay away from CGC. And then you got Big Lots, BIG. Again, this almost looks like a cannabis stock. It's just tanking. Was up over $72. Now all of a sudden it's down at 26 and just doesn't look good. Today down 12%, all the way to 26.94. I have the same basic opinion here that this is probably going to continue to drift down until it doesn't. And I know it sounds so stupid, like, duh, Merlin, why do you watch a show for that? Well, the trend is your friend. So stay short Big Lots, stay short CGC until they prove that they're going to start moving to the upside, and then flip your opinion. But right now, I'm bearish on both of these bad boys. That's your earnings. Here's your economic that happened today. The rather interesting numbers here that I think are noteworthy, and I will bring my drawing tool over here. I'm going to look at personal, let's start with income, right? So the expectation was that we were going to see personal income numbers stay the same at 0.5%, right? So obviously income is critical because we're a spending country and we need to have money to spend. And of course, most Americans are just going to use credit cards anyway. But we actually saw a decline. So we dropped to 0.4%. This is not a huge pullback in income, but it is obviously lower than expected. Then you look at personal spending, and they're expecting spending to drop significantly. They're expecting a 50% drop in the amount of spending. You can see they're going from 1.4 down to 0.7. Actually came out at 0.9, which would be an increase over expectations, however, a decline over the previous number. So you have spending is increasing at a rate faster than people are earning money, and to me that is generally a recipe for problems, because if you are spending more than your income, then you're either eating into your savings or putting yourself into debt. And if you're putting yourselves into debt, then that means we're going to see some problems going forward. So I thought those two numbers were very interesting today. Of course, the one that everybody was keeping their eye on was this bad boy here, the PCE Core Price Index. That one came in line with expectations. It's interesting. It said it came in line with expectations at 0.3%. No surprise there. Yet every mainstream media, every news outlet there is going, oh, inflation's under wraps. It's better now. It's like, oh, hold on. Oh, did I have the wrong screen? That whole time I had the wrong screen? Oh, I'm sorry. That whole time. Oh, I was just staring off at my screen over here. I apologize, everybody. Was that the wrong? This is the chart I was looking at. This is your earnings. Your economic calendar. I find it really funny that almost every headline I saw or news article was talking about, oh, well, inflation's under wraps, inflation's under control. Well, it's not. It means it's still gaining. If you look at here, it's just gaining at the same rate. So maybe it's flatlined a little bit. That's okay. I don't really follow the core PCE price index as much. I actually prefer CPI and PPI, but I'm not the one who's making the. There's my whiskey sip. Thanks, Michael. Start over. It's because you're right. I don't have my glass of whiskey today. Man, I feel like I'm out of sorts today. That was an odd one. I was fully in this conversation over here on my economic calendar. Anyway, you can see the personal income and spending numbers there. I've got the lines drawn, and I was doodling on the chart. But the core PCE price index is the one that everybody is looking for, and especially the Fed, in line with expectations. And it was kind of surprising to see on a day like that where you had disappointing news with personal income and spending. You also had consumer sentiment numbers declining at a more than expected. To me, it does not justify this big market rally we had today, which, trust me, I absolutely welcome it. As you guys know, last Friday, I was put a whole bunch of shares. Almost every single put option that I sold in the beginning of May, actually the end of April, almost every single one of those was put to me because obviously the market has fallen so fast. And I'm fine with that because I just kind of waited for the right opportunity. Markets bounced a little bit today, so I just sold calls against every one of those positions, which is going to give me a much greater rate of return. So I welcome it. I guess the question is, how much further are we going to go? When you look at this price chart, my eyes for next week will be glued to that 4306 number. I personally just don't think we're going to get there. There's not a lot of really critical economic news happening next week. There's no, PPI numbers or CPI numbers or GDP. There's none of that. There are some central bank announcements happening next week. Plus, it's a short week because obviously we have Memorial Day on Monday. So it will be interesting to see what happens next week. But yes, I'm glad I got the opportunity to sell a whole bunch of calls against my long position. So if it moves up to certain values, I'll be happy to dump it and get out. Okay, let's go to some listener questions here. I want to get to a few of them, and then of course I see I've got a few that have come through the chat, so we will dive into those as well. First question came in from Christian, and of course this was put into the YouTube chat. So if you want questions answered, probably the best way is to go into the YouTube videos on TraderMerlin. Go down below whatever video you want to ask a question on, or the most current one, and then type it in there, and I will get to those questions on the show. Christian says, bear market rallies might be a good topic for discussion. In a massive correction like 2008, and the one we're in, 6, 9, and 12% rallies are not uncommon before going lower again. Yeah, and that's the tough part, is we just don't know. We did a show, I did one, I think, a week ago or 2 weeks ago. It was called the dead cat bounce. And, a bear market rally is essentially a dead cat bounce. What you're looking at in a bear market rally or dead cat bounce, some people call them, a fool's bounce, a dummy bounce, whatever. It's when you have a downtrend going and you get a really sharp move up. And I think that the move we're seeing right now, in my mind, would qualify as that. But we've actually had a couple where you had this big bounce here back in March, but that really wasn't an established downtrend yet. I don't think we really had seen the break of the trend. Now we have, right? We're definitely making lower lows, lower highs. So this certainly would qualify as a bear market rally, a dead cat bounce. And if you go percentage moves off the lows, 1 second here as I do the magnet, on the S&P 500 futures from the dead low we saw on May 20th, you're looking about a 9.47% bounce. 5% ones are very common. You get to about 10%, and that's kind of the higher end of the range. So what would it look like if we got all the way back up to this line here where we started, or actually where I have the supply mapped out? That'd be about 13%. So I'm going to be adding more short position, right? I'll be buying more puts as we get to 4,300 on the S&P, probably a little bit before 43, right as I get to that 12% bounce off the low mark, and then I'll probably sell some more at 4,300. And I have the puts I sold today, as I mentioned, were for September. And I also sold for the Russell 2000 for September as well. There we go. So yeah, Christian, I think bear market rallies are commonplace. I think the challenge there in saying, hey, this is a bear market rally versus this is the turn and now all of a sudden we're back to a bull market, right? You just don't know. We can make that assessment. Right now to me, this feels like a dead cat bounce, a bear market rally. Why? Well, because we're in a downtrend and it has not made higher highs yet. But if we get above 4,300 on the S&P, or we get above, let's say, 1960 on the Russell, I might have to change my tune, right? That bear market rally may actually be the beginning of something even bigger to the upside. So, I've mentioned this many times over the years, not just here, but on Power Trading Radio, is My belief system right now says markets are in turmoil. We're going to see lower lows. Play to short the rallies, right? Rallies up, short them. I have to have that mindset until I'm proven wrong. And again, for me, it's very simple. If it starts making some new highs, I'll just exit positions, lick my wounds, take my losses, and then start to look for the long position again until the market tells me to go the opposite direction. What you can't do is say, this is a bear market rally, and I'm going to load the boat short, and then the market keeps ripping, and you keep holding and holding and holding. It's like, ooh, not a good thing, because that'll just blow your account. So don't hold on to your belief system that this is a bear market permanently. It can change very, very quickly, especially when you look at the inflation numbers. If all of a sudden these inflation numbers start to look great, I'm still a little bit of a disbeliever, but that means that the Fed will probably back off on the tapering a little bit, and the market's going to like that and continue to rally. So what else? The questions do I have? I'll get to that one in a second. Here we go. This is less. That is options trading, not futures. I've not studied either. Doug, I would highly recommend studying options. Options to me, and I mentioned this so many times on the show, I look at options as like the Swiss Army knife for financial markets. I mean, you can do anything with it. You can make money in up market, down market, sideways market. If you're looking to generate income streams, you can take fairly low risk strategies and craft income generation streams. So it really is the universal tool out there. This is what I was referencing, was looking at the indexes like the Russell 2000 and the S&P and selling options on those. And basically what I'm I'm doing in essence is I'm committing myself to buy much lower in the market if I'm selling puts. If I'm buying puts like I am right now, I'm pretty much just betting outright that the markets are going to start to drift back down going into September. But yes, study options. Futures are great because you have access to so many different asset classes, but options are the most powerful one out there. So Les says, if they say inflation may be peaking, what could we expect to happen with the equity markets? Of course, the charts will let us really know. Absolutely, Les, you're totally right. Well, what's it going to tell us? So if we hear that inflation is starting to drop, and that, of course, we saw the numbers come out on the economic announcements here just today and last week, right? Sorry, yesterday. You have PCE price index today. Last week you had PPI and CPI, and you also had University of Michigan inflation expectations, which declined. So the university, which I don't trust University of Michigan's announcements, I just never really cared for those ones, they're expecting inflation to start to drop a little bit from 5.4 to 5.3. But the inflation data I'm seeing on PPI or CPI was higher, PCE price index was in line with expectations, and PPI was lower than expected. So we're getting mixed signals here on inflationary data. Bottom line is I think prices are still going up, maybe not at the same rate that it was earlier, but I think that with as I mentioned this before, the unwinding of the Fed's balance sheet, which starts this week, I think it starts Sunday, then we'll start to see higher inflation because you're removing money supply, and I think it's going to drive more people into the dollar. In theory, it should be the opposite. Right? Removing money supply should actually help fight inflation, but I think you have more people buying the dollar because the yields are going to get more expensive, and that should in turn drive prices up. So we're in a conundrum of a market right now. But you were right. If let's say inflation does start to show that it's declining, great. I think we'd all would appreciate that. I'll get my gas under $5 a gallon. I'd be pretty happy. Give me back to $3. When I started driving, it was 98 cents. Date myself there. But if it does, in fact, start to show that it's under control and dropping, what would happen? Well, number one is the Fed would probably not be as aggressive. So the expectation right now is that at the next meeting in June, we're going to see a 50 basis point increase, right around a 97% probability. If inflation numbers before then start to decline, they may cut that to 25 basis points, which would make the entire market do what? Every major firm would be like, oh, good. Cheap money's here for a little bit longer. And the market will probably have a pretty big surge, which is why I'm kind of, being very cautious about saying, hey, go short. I think if the economic data supports lower inflation, then you could see a nice little relief rally here and a pretty big surge. So you got to be really careful there. As a transplanted Michiganer, I'm a fan. Oh, I love University of Michigan. I just don't see university doing a report about the economy. I'd never really felt that to be valid. I'm a huge fan of Michigan. Why? How can you not be a fan of Michigan? Well, I guess which one? Are you talking state or are we talking Wolverines? Well, Wolverines. I like just the Wolverine animal itself. I like, so that's why inherently I'm a Michigan fan. But years ago, this announcement right here used to come out all the time down near the bottom. University of Michigan consumer sentiment and inflation expectations. And I remember one of my trading floor friends was always hot on the consumer sentiment numbers. So you gotta really follow that number to see what people are thinking. I'm like, you know how I figure out what people are thinking? I just go out and talk to people. I see what their spending habits are. I hear what they're talking about with regards to the economy and politics and financial markets. Great. I want to hear what they're saying. That, to me, is my driver of market sentiment and consumer sentiment. What else we got? Maybe it goes down enough, they'll add the cost of energy and food to their numbers. And they'll always have the core, which strikes out food and energy. They'll always have that one. But we got comedians in the mix today. I like to go to Spotties. What will happen? Unloading bond for stock market this Sunday? Well, I don't know. That's a big wild card because I just don't know. I mean, obviously it hasn't happened, so my expectation is that as the Fed starts to unwind their balance sheet and start to sell, again, for those who may not remember, they're selling $30 billion worth of treasuries and $17.5 billion worth of mortgage-backed securities. I believe those are the numbers. And then it's going to double after 3 months. But it's starting Sunday or Monday. As they do that, as they start to unwind the balance sheets, what you really got to be careful of and keep your eye on are bonds. So if they're unloading these bonds that they've been hoarding for so long, here is your 10-year. Right? We are at a pretty decent point. To me, we're sitting right at a demand zone where I'm kind of expecting this bond, the 10-year bond, to hold right around 2.73. Right? We've been there for 3 days just sitting here. My assumption, and I could be completely wrong here because this has not happened and I'm not a bond guru, but is if this Fed starts to unwind those bonds, they're going to have to start offering a higher yield to get people to buy this huge influx of bonds into the market. And they're going to be selling, again, is it 37 or 47? I think it's $47.5 billion a month, and then it'll double to 90 or 100. So a big question, Michael, says who's buying them? Whoever wants them. That's the kind of part that I'm wondering. Who's going to buy them? Right? I don't think really that many people want them. However, if you look at the 10-year right now yielding 2.78, if you're Japan, what do? You take all your yen that's got your Fed funds rate is negative 0.1. I would print up as much money in Japan as I could, and I would go buy these 10 years from the U.S., which is going to make me 2.78% or 2.73%. So I'm pretty much can print 2.7% interest earnings for me as the Japanese government. But Japan has basically backed off. Japan and China, they're not buying the bonds like they used to. I mean, the largest holder of bonds is the person that's selling it right now, which is the real scary part, right? Exactly, Joe. Countries hedging against their own currency could be potential buyers, but I think if you knew, I guess I'll ask this question and leave a little pause. But let's just say that you wanted to buy, a new Corvette. You wanted to buy the new Corvette. And you know that starting Sunday, Chevrolet has ramped up so much production that they've done 10x the number of Corvette construction, and they're just going to flood the dealership with those Corvettes. Would you buy it today? My guess is the answer is going to be hell no. Why would I buy it today knowing there's going to be a huge flood of Corvettes coming to the market? What I'll do is I'm going to wait a couple of weeks, maybe a month, hold off a little bit, and see if that huge influx of Corvettes drives the price down so I can buy this $80,000 car for, maybe I can negotiate for 70 or 60 or maybe even lower because there's so many, nobody wants to buy them. Now, that's obviously an odd example, but bond market's not going to be any different. You're going to have so much more bonds coming onto the market. You have to attract buyers. You have to find a way to get people to buy it, and that's going to be with higher yield. So that would be how I would anticipate this panning out next week or starting next week. Over the next few months, I expect this 10-year to get much higher. I expect it to drift certainly well above the high we saw back here on the 9th of May, which was, the high of that one was 3.2%. Well, I think you're going to get much higher than that. And that's going to be over the next few months as the Fed is unwinding. You notice you've got this overhead supply. I wouldn't really call it supply, but you do have this origin of the last monster move down in the 10-year happened in 2018. That was right around 3.25%. Well, I think we'll knife through that and challenge, 3.7, 3.75. But that's all opinion. I don't know. I'm no oracle. I'm no better than Jim Cramer in that regards, but I'm just not as much of an egomaniac as Jim Cramer is. All right, let me go to more listener questions here. Think Russia could benefit from purchasing U.S. bonds? It would put them, I think it would do a couple things. If Russia did, I think it would put them back in the good graces of the U.S. But do you really think Putin would do that? I don't think so. I certainly they could, and I think it would help them from a posturing, a political position. But I think right now, if I look across the pond over there and I look at Putin and Russia, I'm seeing two big middle fingers pointing at us going, leave us alone. I really don't think that Russia would do that. All right, let me go to this bad boy here. This is from Michael. It's another weed stock. ACB dropped 40% on this announcement of a bought deal. I did not see the news on that one, so unfortunately I don't know the story on ACB. Got a little too much going on. He says a single investor group is buying all the new shares being offered. Glad I wasn't holding ACB, but does this type of deal represent a good long-term investment at such a reduced price? I can't say without reading the articles and seeing what is actually going on that this represents a good deal. Obviously, if somebody comes in and is buying all the shares, that's pretty good. I think that's obviously represents a good sign, but who's buying it, right? It could be some other company just trying to do a takeover and just bury this company. Well, that may not bode well for ACB. It could be that it's just a poor investor who had no idea what they're doing, thinking this is a cheap price for ACB, and they're going to lose it. So I don't trust that just because somebody buys something that it necessarily is a good thing. Judging by this price chart here, I think we'd have to take a deeper look at what ACB is really doing. I mean, hell, ACB has gone from 2021, that peak back there where we're all just staying home smoking weed, I guess, during COVID, fell from roughly, let's see, that high was about, call it $19. Now you're at $1.60. This does not look good in any way, shape, or form. You go back even further, they've done some reverse splits on this, but I think they've done reverse splits, haven't they? No, I don't see any reverse splits. I see some earnings, but no reverse splits. I mean, this thing was up at $150 a share. At some point, you could make the logical argument that this is going to be a great buy, but I just don't know. This to me, it would go in the gamble portion of my portfolio. It looks to me, I hate to say it, like this thing's going to zero. Got to be real careful, even though somebody bought it, or bought, I don't know the exact context of you said bought deal. I wouldn't buy it. Even though it looks so cheap at $1.68, and this is a common problem a lot of traders make, because they'll look at a price chart like this and go, goodness gracious, it was up at 150, now it's at $1.60. Oh, I got to buy some, because even if it goes to $10, I'm rich. Yeah, something changed. Something changed here with ACB. Don't know what it is, but it does not look good. Can you say free samples? Well, maybe that would help their sales. But it doesn't look very good right now. Distance into why home building stocks screamed upward. Well, when you say home building stocks, popcorn, buy the popcorn. You got a great name. I even have a graphic for you. There's our popcorn trade of the day. Of course, I don't have a popcorn trade of the day, but now I got popcorn in the audience. I may as well, throw that one out there. Let me know what you mean by home building stocks and give me some ticker symbols. We can check them out, because when you have a current market environment like this where the housing market is so hot. We've mentioned this one, we talked about this a few times over the past week, where some of you have asked, is this a good time to buy in this area or that area? Personally, I don't think so. I think what you're going to see very quickly, if not happening right now, is a leveling off of prices. It's just gotten way too ahead of itself. And what I think is probably happening, if what you're talking about popcorn is looking at things like Home Depot and Lowe's and major, home improvement places, it's going to think a lot of people might be trying to do some quick little remodels, some fix-ups to their house so they can go and put those on market and sell them. Because what you've been hearing at many places across the country, oh, you mean home builders? Okay. Yeah, totally different. Yeah, I thought you meant like home improvement. They've been screaming upward, but they've been murdered. We'll look at those. Yeah, we've actually looked at those a little bit, so we'll check those out here in just a second. yeah, I think a lot of it has to do with people trying to capitalize on these markets. So you've seen some stocks. Here's your Home Depot. You know, it's been down, but you've had this bounce. Of course, everything's bouncing this week. Hey, Big Ab, thank you very much. You give me nice compliments. Now you give me money. Damn. Thank you, Big Ab. Appreciate that. But yeah, we've looked at Toll Brothers. Here's Toll. Yeah, certainly they've screamed up over the past 4 days, but this chart is not screaming up. In fact, it's going the opposite direction. I mean, we were up at $75 and you dropped all the way down to 50. That's a 33% decline in price on it, so I would definitely not call that screaming up. This is just a sympathy bounce in my mind. I think that everything right now, this last 3 days, has had a huge bounce. I mean, hell, I started off the show looking at some of the numbers. You know, NASDAQ up 7%, Russell and Dow and NASDAQ or S&P up 6+%. You know, this is going to obviously run with it. And same thing with KB Homes. Go KBH. No, this is ugly. I would not call this screaming up. I wouldn't say this is looking good. I think home builders have problems, especially when you saw the numbers that came out last week. Was it? I'm losing track of time. Is that the last week or earlier this week where new home sales were significantly lower than, I think they were supposed to be like 750,000 new home sales and it was like 500 and change. That's a huge decline in home builders. DRH. Oops. Oh, nope, not that one. Oh, what's going on? You're thinking DR Horton. I don't know why I got Diamondback Hospitality, but you know all of them look the same. You know, you look at your Lennar, your Toll Brothers. I don't think that this is a good time to be buying home builders. Matter of fact, I would say short the rallies, just like I would for most of the securities right now, because it's just a downtrend. Wheat stock seemed to me just an ideological thing, like selling windmills and solar panels. Well, there you go. You got it backwards. DR Horton. Or Danaher. Is it Danaher? That was DR Horton. Either way, it looks the same. You know, Doug, it's an interesting point that you make there, and it's a little bit different to me than windmills and solar panels. First off, the barrier to entry to windmills and solar panels is much higher. The cost per item is huge. Solar panels, you know, you're right, it's an ideology where maybe I can now not be reliant on my local energy company and producing some energy from the sun on my own. Great, that's all fine and dandy. I think with cannabis stocks, you've got a couple different things. Number one is you have the medicinal side of it, right? So you have the medicinal side where I'm definitely in the camp of there are some additional benefits of cannabis, whether that's THC or CBDs or some combination of those, that are far superior than traditional Western medicine. I'd rather take certain cannabis products than I would take some Pfizer or Merck-based product, because those products are designed to keep you addicted to their drugs in perpetuity because they make money off of you and not necessarily make you better. I think, you know, you could go back to Genesis, right? I've given you all the seed-bearing herbs and plants to use. I think it's right in the Bible. And I'm not a religious person, but I know many of you are. Why not allow medicinal aspects to cannabis to proliferate and see if we can actually cure some of our ailments? Now, the good news about what's going on in the U.S. right now is this. Because we're starting to see more states not only legalize it for medicinal but recreational, is I believe that the FDA will actually spend some money and do official tests. Because it was illegal, they're not going to be doing all these tests on it. But if we can now do a medicinal test on cannabis and see how it might impact things like cancer or Bell's palsy. I mean, there's so much evidence that shows this actually helps cure Bell's palsy. You know, and I don't know if you guys have ever seen this type of stuff, but if you look at some of these kids that are just like, or grand mal seizures, you know, where they're just literally just, they can't even function because they're just seizing all the time, and you give them a little bit of CBD with THC on it, whether it's a chewy or gummy or whatever, and all of a sudden they stop shaking, they can now talk and communicate. We should be experimenting with that more and seeing what this might hold for the benefit of mankind. So I actually look at this as way different than solar or windmills. I think that there are some huge aspects. Plus, you could say, you get the recreational side where people just like to smoke weed and relax. Cool. I'd much rather have a person next to me that's smoking a joint versus somebody who's getting drunk off whiskey, because when's the last time you saw somebody who's smoking a joint throw a punch? It's like, can you hand me the remote? I'm going to sit here and say some funny stuff and do goofy things. Whereas you get somebody drunk, it's like, hey, I'm going to punch you in the face, and then I'm going to drive my car into a tree and kill somebody. Is it, Christy? Good. See, it's funny. Some people hate the smell of weed. Others love it. I love the smell of it. It depends on the strain, of course. But yeah, I think it smells great. And I agree, Bill. Holistic, I believe holistic is, I can't say always best. I think for the most part, and I've just learned this through personal experience. I know this is digressing from the traditional show we normally do here, but I've just seen so many people in my personal life that have had horrible effects to traditional Western medicine, and very different reactions to Eastern medicine. I'll give you an example. I'll tell you a story. This blew my mind. This is a story I could not believe it. A friend of mine was getting married in Stockholm, Sweden. And his wife, or fiance at the time, they're getting married. The way they do the wedding parties in Stockholm is you don't sit with your significant other. So let's say you were married and you showed up there with your husband. They would make you sit at different tables because they want you to interact. Really cool idea. Anyway, so you're all uncomfortable. I sat next to the mom of the bride, and we started talking about weed because obviously we had some friends from Amsterdam, and I think somebody had some weed at the table, whatever, going there. And she starts talking about holistic medicine. So the table got a nice conversation going, and she goes, I got to tell you something, and this is, it changed my life. She says, 17 years ago, for some reason, I lost my sense of smell. And of course, I'm sitting there going, man, that's your sense of smell? Man, I'm smelling everything in the room going, man, this is great. The food's good. I can't imagine losing my sense of smell. So she continued to go on and she says, I've had like 7 surgeries. I have my nose drilled out and scoped and trying to figure out what's going on. Spent hundreds of thousands of dollars on medical to get my smell back and nothing. And she says a friend of hers, after 17 years of this, said, hey, I've got this Chinese doctor. Why not just try it out? He's a holistic medicine guy. She said, okay, fine. She says she went to this guy's office. He talked to her for a little bit, gave her a bag of herbs, and no, it wasn't cannabis, but it's just saying natural products, plants, and said, throw it in a pot of boiling water, put a towel over your head, and breathe in for 10 minutes. Got her smell back almost instantly. And I'm going, Western medicine doesn't want that individual to smell again. They want you to keep coming back and go to the doctor. Whereas this Chinese guy is just like, hey, here's some herbs. We've been doing this for 3,000 years. Try that and smell it. So I am definitely a fan I would try Eastern medicine before I went down the Western medicine route. But anyway, I don't know how we got down this path. Thanks, Michael, for the ACB request. There we go. All right, let's see. Did I spark any debates here? Can't wait to watch this show. No. Sorry, Margaret. My weed smoking days are done. I used to smoke all through college and everything, but nah, I just start to have panic attacks now, so not going to work for me anymore. I was contemplating 5 shares so I can still sell covered calls and residual income on them. Okay. Ask Bonnie, which security? Are you talking about ACB? Oh, there you go. You're higher up here. One sec. Any thoughts on buying Amazon pre or post split next Friday? Good question. So you guys might remember we talked about splits. Historically, what happens with splits is when they make the announcement, you get nothing but bull market. Nothing but a rally until the split. It's almost every time, except this time with Amazon. So Amazon announced their split, and it's pretty much done nothing but go down. I believe right here was the split announcement date, the vertical blue line. So it rallied for 2 weeks. But when they made the announcement of the split, it was trading at 27.87, and here we are at 2,300. I'll be honest, Dr. Bonnie, to me, this is very different than normal. And the reason I say that is normally when the announcement happens and they actually split, it'll gap up that morning and then just sell off. But it already has so much pain in it. I mean, it's already down significantly. So I have to be honest, I don't know how to trade that announcement. Like, I personally would just shy away from it because it's too unknown. If this had rallied straight into this S right here, you guys see at the bottom, it says S. That's what the split date is, so it'll be on the 6th. If it was rallying straight into that, then I'd be okay looking at maybe buying some puts up at a much higher level, expecting it to gap up, and then people unloading their shares. But because it's sold off so aggressively like this, I don't know. It's very, very different. Very, very different. Hey, good to see you, Lori. Totally, Tom. And I knew someone was going to say that. I'm actually the exact opposite. Tom says, not all drunks likes to fight guys. There are flirts, comedians, and I can drive guy. I definitely am not the I can drive guy. I'd rather ride my electric bike. Don't hate. Or walk. But I'm the goofball. I am definitely the goofball. I do not get aggressive. I would say that's my one vice. It's every now and again I like to have a cocktail, and when I have a couple too many, I get really silly. You're welcome. Oh yeah, right. Top Gun's on the list. I just rewatched the original Top Gun because you want to set the context. And even though that movie was made 20 plus years ago, it still stands the test of time. What a good movie. Good movie. All right, let me see. What time is it? I'm losing track of time. Holy cow! I am ready for a glass of whiskey. Let me see here real quick. I'm seeing which ones. Ron, you sent this question in, so I haven't looked at the charts, but let's just look at these ones for the heck of it anyway. You talk about fertilizer companies. It says Mosaic, MOS, and NTR are very scarce and are in very high demand. Both these companies ripped to the upside all February and March into April. Since then, they've just tanked. Why? Shouldn't they just keep going up, extremely scarce and in high demand, but keep sliding? I can't figure out why. Well, I think what you're going to see there, Ron, is with this price chart here. So here's Mosaic. We'll start with Mosaic. Obviously, you're right. We have this huge run up, pretty much all of 2022, or at least so far into 2022, and then peaked out on April 19th. And I think that the predominant reason that you're seeing this sell-off right now has nothing to do with its scarcity, has nothing to do with crops, has nothing to do with, the need for fertilizer. It has the need to do with the broad market is getting crushed. If you were to look at the peak here, April 19th, well, that obviously is a lot later than the equity market started to roll over. But when did you look at the last recent surge, started in late March, early April. I think that a lot of this has to do with this is specifically about markets selling off and the rising tide, so to speak. It's just taking the whole market down with it. So look at NTR, which I don't know much about NTR. Nutrien, same picture. Regardless, and I love that you look at it from that perspective, Ron, and said, hey, it's in scarce demand, etc. That the resources are scarce, but just look at the price picture here. What's this price telling you? If I look at this price chart of NTR, this is what I see. I see almost a head and shoulders pattern, right? It's hit it once, it's rallied back up, made this high right around 117, came all the way back down to right around 92, it's bounced, and now it's looking weaker. So I'll tell you, this is an example for me of shorting the rallies. I mean, even though it's scarce, this is the challenge I have with financial markets, Ron, and everybody here. I think most of you probably understand this by now, is you can read these headlines about how scarce it is or how in demand this product or service is. That doesn't make a difference, in my opinion. What makes a difference is the price chart, right? The price chart needs to tell you what's going on. And the price chart of NTR, well, that bull market run looks over to me, and now it actually looks like it's starting to make lower highs and potentially start making some lower lows. So short them if you got them. Same thing with Mosaic, right? Pretty ugly. Yes, it was awesome, but that trend broke. So you have to change your perspective. And, I have it right here. Here it is, Ron, and others. This isn't just for Ron, but I have this list right here. I think if I get close enough, you guys can see. Number 3, ignore the news and listen to every word of it. Oftentimes, news is already reflected in the stock's price by the time it comes out. However, understanding what is happening with the market overall is of vital importance in planning your next attack. These are my 10 laws, and I think you have an example of that right now. You were probably dead right that there was in high demand. Key is was. Most of the stuff we're going to see is lagging. That information that comes out, when Warren Buffett says he's buying something, he bought it, and now he's just telling you about it months later. So there you go. Cool. Good. Well, I hope you locked in some profits there, my friend. Futures trade on Sunday to early close Monday. Yes, I believe so. Obviously, Monday we're going to be shut down for Memorial Day, but I think futures do trade Sunday night and then into Monday morning. And they stop there. All right, I don't have anything from an economic perspective for Monday. Obviously, our markets are closed on Monday, or most of the markets are closed. Some are going to be open. It is Memorial Day on Monday, and I would encourage everybody, not to sound like a cheerleader or anything, but it's always I think a lot of people look at Memorial Day as a great fun day, go out and barbecue and go do fun things, but I think there should be some reflection as to the need for that holiday and all the people who have passed away, either fighting for their country or giving their lives for our freedom and the liberties that we have. So Monday is kind of a solemn day in my mind. Obviously, I'll probably out enjoying the day, but take a moment to reflect those that couldn't be here to enjoy enjoy the fruits of their labor. And thanks to all those that have served our country. This isn't a Veterans Day, it's Memorial Day. So those that are fallen soldiers. So for you who have family, friends that have passed away from serving for our country, thank you very much. I will be raising a glass in your honor on Monday. Yes, definitely an American holiday, but I think other countries around the world also have holidays for their soldiers who have fought for their country and for their rights. All right, I'm going to wrap it up here for today because I am in dire need of a glass of whiskey, seeing as how I was actually talking about a chart for 10 minutes and didn't even show you guys that chart. Sorry about that. Anyway, I hope you had a great trading week. I will not be doing a show on Monday, just going to take that time off as well. But I'll be back on Tuesday, I believe. Who's going to be on? I have guests next week. So, Jerry Baldwin. Jerry Baldwin asked if he could come on, so I'll have Jerry Baldwin on again on Tuesday's show. And then if you guys have something you want me to talk about, very simple. You can put your comments down below the YouTube video. I know we have some new people here today. Hit that subscribe button. That helps me out as well. Like the button, share it if you want. But if you want to get in touch with me, you can email me at TraderMerlin@gmail.com. Until then, happy trading, everybody. Hope you have a great weekend and have a reflective Monday and think about all the things you're grateful for and who helped you get there. I'll see you guys on Monday or Tuesday. Take care.